Secretary Blinken on a US broadcaster MSNBC in the previous hour. There's what Russia says and what Russia does, and we haven't seen any pullback of its forces. Quote, so far, we haven't seen it. Coming up, the US refusing to give the all clear.
The United States is prepared no matter what happens. We are ready with diplomacy, and we are ready to respond decisively to Russian attack on Ukraine, which is still very much a possibility.
That's next. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
So far, we have not seen any de-escalation on the ground. On the contrary, it appears that Russia continues the military build-up. We are ready to sit down and discuss with them, but at the same time, we are prepared for the worst.
Western leaders on guard. The Defense Ministry in Moscow saying the following. Units of the western and southern military districts that have completed their missions and will start moving back to their garrisons today. The Kremlin has also denied the claim that it's continuing a military build-up in the area. Joining us now is Bloomberg's Anne-Marie down in D.C. Maria Tadeo out of Brussels and NATO's headquarters. Maria, what is the latest?
Well, Jonathan, I've been at NATO the whole morning because European defense ministers, are holding a meeting today. Of course, a lot of this in reaction to Russia. And what I hear at this point is that they do not see real proof of de-escalation. They continue to say that they want to independently verify the claims that Russia is making about pulling the troops back. They also say that this is not just troops. They need to pull back some of the weapons and the military equipment that could be left behind and put them again in a position to attack Ukraine. And they also say that they want their own intel to essentially confirm all of this. The flip side, of course, is coming from Russia. A spokesman for the Russian government saying today marks the biggest propaganda effort that we've seen from the West, with an invasion that did not take place and that was essentially fake.
AMH, just moments ago, Secretary Blinken with MSNBC, the US broadcaster, saying there's what Russia says and what Russia does, and we haven't seen any pullback of its forces.
Yeah, he basically reiterated exactly what we heard from Ukraine's foreign minister yesterday, the second we had
that news of reporting out of the Russian Defense Ministry that they had planned and were moving troops back. And to go a little bit further, Secretary of State Tony Blinken also talked about the fact that not only are they not seeing Russia pull the troops back, but they're actually seeing an effort to move some forward. And they want to engage with the Kremlin, but they are prepared for either direction, whether or not this goes towards more escalation on the border or whether or not it goes towards a path to diplomacy. And they actually see that troop movement move away from the border.
AMH down in D.C. Anne-Marie will catch up a little bit later on those Fed picks as well. Maria over in Brussels, thank you very much. Let's turn back to the panel. Bob is with us alongside Matt and Subhadra. Bob, let's start with you, sir. The energy piece of this and fixed income at the moment associated with this broader story. Bob, how are you and the team thinking about it?
Well, of course we're concerned because any incursions into the Ukraine, you're looking at oil going up. Pick your multiple of 10, 30, 40, 50%. That's a big shock. We step back and we think about that and we wonder, how will companies be able to pass that along? That's the first problem for corporate profitability. And then it also brings back into play some of Bullard's comments, get to 1% by July. So there's a little bit of protection against an oil price spike in that 1% number by July, we believe. So we think he's right. The rest of the FOMC, who thinks they could do 25 basis points a couple times this year, are wrong. And here's another ingredient that has to go into their calculus.
Subhadra, your response, please.
So I think there is a level of complacency, if you will, in the markets. You're not seeing that level of panic either in equities or in the commodities complex or even in bonds for that instance. I mean, we saw a little bit of a flight to quality on Friday after comments from the White House, but broadly speaking, the market seems to be dismissing any sort of serious escalation, if you will, coming from the Russia-Ukraine conflict. So really, for the most part, I think that we just have to see real action before you start seeing panic. What the situation is doing right now is contributing to the volatility in equities as well as fixed income markets, broadly speaking. But again, I think all bets are off if there's actually action, because you're going to see a significant repricing both in the bonds as well as in the stock markets and in the commodity complex, which is going to be very, very negative for the economy. And that's why I think another reason why the Fed's going to be very, very careful heading into March and not jumping into a 50 basis point rate hike.
Well, crude's already in the 90s, just short of 95 on Brent at 94.89, 93.49 on WTI. Matt Hornback, this takes us quite nicely to the work that you and the team at Morgan Stanley have been doing. I think of Mike Wilson's work over the weekend as well. It starts with an inflation story, then a rate response, then a growth scare. You're on point 3, Matt Hornback, already.
Yeah, well, I mean, John, I think the growth scare part of that 3-part series you just mentioned is really where the debate is today, at least in my conversations with investors. You know, people are wondering what the flattening of the yield curve is actually suggesting about the future of economic activity in the U.S. and abroad. And so, you know, when we look at the flattening of the yield curve, you know, our read of it, and much to the point that Subhadra raised on the lack of reaction, more or less, in financial markets to what's happening between Russia and Ukraine, is really a liquidity effect, we think. I mean, we have to remember that both the ECB and the Fed are still easing monetary policy, if you can believe it, with their bond purchases. And I think ultimately that source of liquidity, albeit it's much less today than it was last year, is still making its way into financial markets and ultimately cushioning the blow from some of these geopolitical events that we're monitoring.
Look, Matt, it's a good point. Every time we have this conversation, I laugh. Every time someone reminds us of it. They're still doing QE. It's not over yet. Bob Michael, Matt Hornback, Subhadra Japa sticking with us, staying on top of the diplomacy, the headlines coming from respective leaders at the moment. A little bit later, President Biden to speak with his German counterpart, Chancellor Scholz. That will happen today, according to a US official. Another one for the diary. Coming up next, the morning calls, and later, the worst inflation in a decade. Heineken boosting its prices to offset surging input costs, and worried people might drink less beer. Really? That conversation's still ahead. From New York, this is Bloomberg.
at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Here's the situation, whipsawed by headlines. The Russian government suggesting they're pulling back. The US government would like to see some verification of that. And in the meantime, we just knock it around in between headlines from either side of the Atlantic. Futures down 0.5% on the S&P. The bond market shaping up as follows. 2s, 10s and 30s, equities down, yields back in. A few basis points, down by 2 or 3 on 10s to about 2.02%. That's the price action here in the morning calls. First up, Wolf Research naming Raytheon a top pick in the aerospace sector, highlighting its underappreciated and improving free cash flow. A stock is unchanged. Bank of America downgrading Viacom CBS to neutral, no longer expecting an imminent takeover following its quarterly results. And finally, Evercore upgrading Macy's to outperform $50 price target, seeing several catalysts potentially boosting shares up by 90%. We're at $26.55 in a pre-market, up by 4.4% in early trading. Up next, Heineken sounding the alarm on surging inflation with Walmart earnings on deck. From New York, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
WTI was hot. Retail sales were good. Yields north of 2% on 10s coming back in just a little bit. Your next stop here, Fed minutes later this afternoon, and $19 billion of 20-year notes coming to market. Euro dollar unchanged at 113.57. Crude just about positive, up by 1.5%. 93.50, let's call it, on WTI. So 20 seconds in, your equity market is lower by 1/3%. Bottom of the pile here, communication services down 0.6%. At the top, given where crude is right now, energy equities back on top, advancing by 0.7%. Breaking this one down for you with your movers at the opening bell. Here's Taylor Riggs.
John, it's interesting that you mentioned technology sort of at the bottom of the screen today, and maybe for the year in many cases. There's some interesting movers as it comes to this space as well. Remember when Apple made all of those privacy changes to their iOS software on how they can track you, making it harder actually to track you across different apps? Well, it looks like now Alphabet is trying to do a similar story when it comes to their Android phones. And so really making it harder for some of the advertisers to track you, make it more personalized. When Apple did that, remember, it wiped out about $300 billion from Meta. We know that is Facebook, their market cap. Just your daily reminder, with that stock off 3% today, you're still off 40% from your record high and off 30% from the last earnings. So really all trying to digest what some of these changes within the social media space mean for some of these companies as well. Flip up the board because we're also in the middle of earnings. So let's take a look at this. Akamai is an interesting one. Now, they kind of have a relation to the streaming service, but investors really digesting the purchase of Linode and trying to look at it as a long-term positive, despite maybe some uncertainty this morning. We talked about Viacom. The streaming numbers look good, but remember, it costs a lot to continue to remain in that space. Airbnb was a huge standout, as I think I said at the top of the hour. 175 customers last quarter booked nights for more than 3 months or more. So, John, we may be the only ones not away for 3 months. We're actually still here in the office. And finally, Kraft Holdings. It is all about that price pressure and passing those costs on to the consumer.
Did you see Belgium might be going to a 4-day week if you'd like one? Did you see that news?
We could move there.
4-day week. I said I'd take surveillance to Brussels. We'll do the show out of there. And Taylor, you can turn your work device off without fear of reprisal. Apparently, you can ignore the emails. We're all going to Brussels. Taylor Riggs, thank you very much. This show gets serious now on the inflation front. Beer is about to get more expensive. This was the Heineken CEO.
The big unknown is, how much of pricing are we able to pass through? We already took 8.3% pricing last year, 11% in the second half. That's about the highest pricing that we have seen in a generation. We're a bit cautious in our outlook, is that we don't know for how long that will last, as what's happening right now is rather unprecedented.
Kelly Lyons, will consumers push back?
Well, that is exactly the question. Inflation is front and center, not just for companies like Heineken, but for consumers as well, and of course, for central banks. And just to put in perspective the kind of inflation we are talking about, it is the highest in decades, 9.7% on producer prices, 7.5% on consumers. That is the reality at the moment. And the interesting thing, John, is we've seen this showing up in consumer sentiment. It has been diving as inflation has hit them everywhere from the grocery store to the gas pump, but that hasn't actually materially translated into any spending pullback as of yet. We saw that borne out with the retail sales data we got this morning, blowing estimates out of the water, showing demand is still resilient in the face of inflation. The question is how long that's going to last, if consumers will continue to tolerate these higher prices as real wage growth is lagging and they're starting to draw down on their pandemic savings. And this is really what the Heineken CEO was alluding to. It's an issue for retailers as well, as they try to exercise pricing power in order to protect their profit margins with some of the higher costs that they are facing, but without doing a material hit to the top line as a result. That is especially true for discount retailers that cater to lower end consumers like Walmart, which will be reporting tomorrow. And we'll get more retail reports from Home Depot, TJX, Lowe's over the course of the next week. Those cost pressures will be front and center, John.
Kelly Lyons, thank you very much. Bob Michael, can I just come over to you? Could you do a quick study on the price elasticity of demand for beer? What would your thoughts, just lean on your economic knowledge, what do you think that would be?
You moan about it for a few weeks and then you pay for it. And I think Kelly made a very important point about how resilient the consumer is. It bounced back from bad spending in December with strong spending in January. The consumer looks great. That's 2/3 of the economy. We have to accept that. You look at deposit balances, they are still very high. Sure, they've come down a little bit. They are still very high. And wages are going up at rates we haven't seen in decades. And in a tight labor market, guess what? Heineken is going to raise its prices, and then it's going to have to pay its workers more, first to find workers, and then they're going to demand higher wages so they could pay for the higher prices of the beer.
On the US consumer, I'll take that last remark seriously. RBC's Amy Wu-Silverman said this.
Like an Ollie or a dollar store, Dollar Tree, Dollar General, you know, the Walmart, Yum, all these cohorts where it's very leveraged, that low end consumer. We're not seeing that start to be priced in, but now the options market is starting to flag that concern to the downside.
Subhadra, are you expecting some pushback from the consumer this time around?
It's possible, right? But the counterbalance to the consumer trying to push back on this is that the employment picture is pretty robust. You're looking at an economy that's at or close to full employment, with investors have a decent amount of disposable income in the background. They also have a decent amount of savings. So I think that this, you know, it's going to have to, prices have to remain higher for a lot longer for us to see that really meaningfully impact the consumer. You're seeing that in the January retail sales data where, you know, investors, you know, money that they didn't spend perhaps in December because of the Omicron variant, they're spending in January in online as opposed to in-store, you know, purchases. So there's money to be spent, and I think you're going to see that at least for the first half of the year, which is kind of supportive in some respects for policy. So that sort of trajectory, I think, is here to stay. We'll have to see if that persists, because real earnings are coming under pressure, and over time, I think the consumers are going to have to pull back.
If you're just tuning in, we're about 6 minutes into the session. We're pulling back on 10-year Treasury yields by 2 basis points, still north of 2%. Not a major move. One more stop for this bond market. At about 1 p.m. Eastern, we get an issue of $19 billion worth of 20-year notes, then the Fed minutes. If we take a look at the equity market, we're pulling back just a subtle amount, a mild move lower. No drama here in a big way. Just some comments from Secretary Blinken in the last hour saying the following, quote, "There's what Russia says and what Russia does, and we haven't seen any pullback of its forces. So far, quote, we haven't seen it." That back and forth just continues. That echoes what we heard from the president yesterday and what we've heard repeatedly now twice in the last 24 hours from the NATO Secretary General Jens Stoltenberg. So equities just a little bit lower, softer on that. The story from Mike Wilson and Morgan Stanley is this. Let me quote him. "It's time to pivot to growth and how much it will decelerate. We remain more concerned about growth than most, and Friday's consumer confidence number should not be overlooked in that regard. Correction remains incomplete." Now, Matt Hornback, you work closely with Mike, so let's build on this together. What are your thoughts on this issue with the consumer, and why is this belief that risk assets haven't seen that correction that some people think we have?
Well, John, I mean, I think within any research organization worth its salt, there's healthy debate about these various issues. And in our organization, that applies. I mean, our sense of it is that growth is set to accelerate from here. I mean, that's what our economists are calling for. That's the way I'm looking at the economy. I mean, with respect to this idea that consumers are feeling badly about paying higher prices, I mean, who wouldn't be feeling badly about paying higher prices? The question is, are you willing to pay those higher prices? And we see very clearly that people are willing to pay them. Now, if people don't feel like they can afford to pay those higher prices, there are plenty of options for them, right? They can demand higher wages, which is something that we're seeing. If they're not working, they can go out and fill one of the 3 million more job openings that we have today than existed before the pandemic. So if you're really upset about paying higher prices for beer, which I can appreciate most people would be, go out and get a job, or you can actually demand higher wages. This is the environment for you to do that. And that's what we're seeing. So we think growth is going to be pretty healthy this year, John.
Matt, the issue, though, as you know, it's not as simple as going out and getting a job. Wage growth in real terms is negative. Isn't that the issue at play here at the moment, Matt?
Well, John, look, when the money hits my bank account, it hits in nominal dollars. It doesn't hit in real dollars. And it's ultimately my decision as to whether I take those nominal dollars and go pay nominal prices. And again, this is what we're seeing. We're seeing people going out and paying higher nominal prices. And that is in part a factor behind what's driving inflation higher, is the demand side of it. And again, like I said, our economists expect a very robust real economy this year. We've got real growth upwards of 4%. We're not that far away from consensus either. So consensus also expects very strong real economic activity this year. And as we see that come through, you know, this is what the Fed is going to have to increasingly focus on.
Matt Hornback, you know me well. I'd never look to expose internal divisions of a research department, ever. Bob Michael, your view on why this correction is incomplete?
Could I just add one thing to Matt's comments? If you can't afford it as a consumer, what do? You finance it. And this is where the Fed has to enter the fray, because inflation is pushing up the cost of goods and services everywhere. You're seeing it in housing prices, but guess what? Consumers will pay higher housing prices because the cost of mortgage financing is still at generational lows. It's the weekend, you want your beer, it's gonna cost more, you don't have a lot of cash, put it on your credit card and figure out how to pay it back later. Those credit card costs are also low. So I think that's one of the things we need to talk about. Why the Fed is coming in and raising rates is because the cost of financing these higher prices is not prohibitive. Now, what did you want to talk about?
I wanted to talk about a market correction, but you brought up something more interesting. This rebound, this recovery we've seen, Bob, wasn't really fueled by consumer debt, household debt. It was fueled by fiscal policy. And I just wonder, Bob, how you think this market, how consumers, how the economy will respond to higher interest rates this time around with that in mind.
Really? I don't know who goes out and buys a house with cash, particularly with the price appreciation we've seen.
Well, Bob, let's talk about consumer spending.
At the retail,
you saw the savings rate.
Look at retail
you knew
sales.
what savings were.
Furniture was a big item. A lot of that gets financed with credit card. So there's a lot of financing that occurs. You're right, there was a huge fiscal impulse, and that fiscal impulse created higher savings, and that's trickling down a bit. But that's maybe it's giving the consumer conviction to keep spending. And then Matt's right, they're watching the deposits from wages into their account go up. They're not thinking of it in real terms, they're thinking of it in absolute terms. And we think that continues for the next couple of years.
Subhadra, final word, please.
Yeah, no, absolutely. I think that there's definitely a lot more room for for growth of the consumer. There's definitely I think growth is going to be pretty robust for this year, and for the most part, I think that this sort of trajectory towards higher yields is very much in play. We'll just have to see how the data progresses and if the Fed will actually be able to raise rates at the same pace at which the market's pricing in.
You see what happens when you mention the price of beer, Subhadra, how fired up the gentlemen get every single time. How spicy these kind of segments get, how quickly they do. Subhadra, thank you. Subhadra Japa, to Matt Hornback and to Bob Michael. We're not trying to fall out here. Everybody's friends. It's good to catch up with you both. Thank you very much. About 12, 13 minutes into the session. Your equity market's pulling back just a little bit. Coming up, we head down to D.C. on something we haven't talked about so far. The president's Fed nominees hanging in limbo.
Sarah Bloom Raskin has spent recent years pressuring the Fed to stop being a neutral regulator and instead become an ideological left-wing activist body.
That's next. This is Bloomberg.
A lazy rain am I, the skies refuse to cry.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus Omicron variant still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I will delay votes on these nominees. We will update you when we've rescheduled. My Republican colleagues claim it's because they haven't gotten the information they've requested from one of the nominees. Let me be clear, Ms. Bloom-Raskin has been the subject of an unrelenting smear campaign in fear-mongering by the ranking member and Republicans, something that's become all too common.
This is where things are at right now in Washington. Republicans stalling votes on President Biden's Fed picks over just one nominee. The GOP Senator Bill Hagerty demanding more answers from Sarah Bloom-Raskin.
There are more than 35 questions where her answers provided were blanket, I do not recall or I'm not aware, in response to questions on this. So we have not gotten to the bottom of this, and we need more information. And until we do, I'm not prepared to vote on her.
Let's head back down to D.C. and catch up with Anne-Marie. Hey, Anne-Marie.
Hey, John, as you could see there, just given the rhetoric from the Republicans and from Sherrod Brown, the Senate chair of the Banking Committee, this is becoming very contentious. And we should point out that the timeline now is very elusive, because now you not only have an issue with Sarah Bloom-Raskin, but given the fact that Republicans do not want to push ahead on her vote, and the Democrats are saying they're all going to be lumped together, all 5 of the president's Fed nominations are right now in limbo. And the Senate is going to go on recess starting Friday afternoon. So what you have now is potentially no movement forward on the president's Fed picks, and all 5 of them, including Fed Chair Jay Powell, being held up in this.
AMH, the latest in Washington. I imagine we'll get more details on this through the day. So some tension in Washington on a particular issue that's important. Some more tension with China and Hong Kong. This came from the chief executive of Hong Kong, Carrie Lam, saying the following. At this critical moment, we must give full play to the advantages of one country, two systems. I have submitted a report to the central government and put forward specific requests for assistance as soon as possible. Mike McKee, your read on what's happening right now with the leader of Hong Kong and the leader of China, the Chinese President Xi Jinping.
Well, they're cracking down because they're worried about the outbreak of COVID in their countries. It's all one country, according to the Chinese. But here's the thing, John. The virus is still in charge everywhere. And the interesting news of the day, along with China, is that in Europe, as you can see, cases are starting to decline, but they're nowhere near down as much as in the United States, and yet the Europeans are loosening restrictions much more quickly than we are. In Germany, Austria, France, Switzerland, the Netherlands, announcements coming that they are starting to get rid of the restrictions on people's ability to go out. China, of course, is still stuck with rising caseloads, so they're going through this. We must do everything possible because they have their no COVID policy. So that leaves the question, what happens here in the United States? Next week, the Center for Disease Control is expected to reduce its mask mandate, make a change to that so we need to wear them as much. But we're still waiting to see how that plays out. The one bit of interesting good news for Americans who want to go on vacation, Disney is dropping its mask mandate as of the end of this week. Beginning February 17th, face coverings will be optional for fully vaccinated guests in both outdoor and indoor locations. It's all a reminder that no matter what happens, we still have to keep an eye on the virus.
Have you seen this quote from Xi Jinping? Just to go back to that, Mike, I just want to read that out for our audience. The Chinese president saying the following: Hong Kong's government must take up the main responsibility to stabilize and control the pandemic as soon as possible as a mission that overrides everything. Mobilize all available forces and resources and take all necessary measures to ensure the safety and health of Hong Kong's citizens and the stability of Hong Kong's society. Mike, you've covered this stuff for a long time. Have you seen the Chinese president take such a strong line to speak so forcefully about what's happening in Hong Kong?
Well, not necessarily about what's happening in Hong Kong, although when they were going through a lot of the civil disobedience, Xi Jinping was very strong on cracking down on that. It's the COVID-0 policy. His policy is there should be no COVID in China, and you isolate people and you lock down until you get rid of any outbreaks. And Hong Kong hasn't done that yet. Much of the rest of the country has. It's slowed the economy, and he's worried that we're going to see some real problems with Hong Kong, given its role as a financial center, as an export center, if they don't eliminate COVID from there.
Mike, got to run in a minute. Just a final word. Caught up with AMH just then, down in Washington. What was happening with the Fed picks? How do you think this plays out?
Well, it's going to be up to the Democrats' leadership to decide whether they want to take the steps that they do have available to them to pull the nomination from the banking committee and take it to the floor directly. It's complicated, but they can do it. All of that has to wait on the New Mexico Senator Ben Ray Lujan, who had a stroke, coming back to the Senate because they would need every vote to do it.
Michael McKee on the latest. Thank you, sir. Let's get you some sector price action on this equity market as we pull back just a bit. Here's Kriti Gupta.
Well, good morning, John. Red on the screen, a lot of it has to do with tech driving the indexes lower. A lot of that selling pressure concentrated in that big tech sector. Put this into perspective, though. Yesterday, you saw the NASDAQ rally 2.5%, so perhaps a reaction to simply the gains we saw yesterday. To the top side, though, you are seeing energy outperform up 2%. A lot of this has to do with, of course, falling oil prices, really tracking the uncertainty between those Russian and Ukrainian tensions. Let's get back to the tech story, though, because that's really where you're seeing a lot of action, not just big tech, but specifically in social media names. This comes after Google is planning to adopt new privacy restrictions that curtails tracking across apps on Android smartphones. It's a move that follows what Apple did not long ago and puts limits on companies that get a lot of their revenue from tracking the advertising spending, John.
Kriti, thank you very much. Kriti Gupta on the latest price action.
Oh, I'm swimming in your ocean, give you all of my devotion like nobody, like nobody. You got me dripping in emotion, imagination overflowing with your body.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
that capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
"25 minutes in, equities pulling back here by 0.7% on the S&P. On the Nasdaq, by a similar amount, we're off by more than 1% now, down by 1.4 on the Nasdaq 100. The data's been decent. CPI last week, massive upside surprise. PPI, upside surprise. Retail sales, upside surprise. When I say decent, I mean decent for those calling for a big move from the Federal Reserve. The likes of Matt Hornback, Bob Michael talking up a 50 basis point move from this Fed in the middle of March next month. That's the equity picture. Here's the bond market story. 2s, 10s and 30s. Yields come in as equities start to dissolve a little bit lower as well. We're down by 3 basis points on 2s, just short of 155 on 10s at 2.0259%, down 2 basis points as we continue to get whipsawed by headlines out of Ukraine, Russia and the United States. A conversation a little bit later between Chancellor Scholz and President Biden. That's set to take place today. We'll bring you the headlines as they come through. As the price action, here's the trading diary. Minneapolis Fed President Neil Kashkari speaking at 11 a.m. Eastern Time. Then the U.S. Treasury selling $19 billion in 20-year bonds at 1 p.m. We'll get the Fed minutes at 2 p.m. plus President Biden meeting with Germany's Olaf Scholz. Initial jobless claims coming up on Thursday and more Fed speak. Mester, Evans and Williams all on the docket. From New York City, thank you for choosing Bloomberg TV. For our audience worldwide, this was the countdown to the open. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
I'm Rob Level, and if you watch to the end of this video, I'm gonna give you a free car. And I'm gonna light myself on fire. Pain flow, I discovered. Change show, cause I done it. Regain soul and recover. And remain whole, cause I suffer. Spin a bankroll, I get nothing. Get your payroll on my bunion. Spit a flamethrower for my stomach, I'm an a-hole, but she love it. I pay for the fitness, I see how loose she can get it. I come with super equipment, she say her booty feel lifted. Who killing all of them, bitch? Wearing gloves as he finish. Yeah, I'm like OJ to win it. There ain't no question who did it. With a bad bitch on my business. Notice I said on, I in it. So wet, I slipped in. Big soda, the shack can't fit it. We too out there clipping. Clue me in, I don't like that hitting. Caught bad in the color bar Simpson. Like abortion, I ain't kidding. Just get in. Just get in. Right, that ain't hard. Just get in. That ain't hard. That ain't hard. Just get in. Right, that ain't hard. That ain't hard. Just get in. On the road to nowhere, get deep. But I found a sign.
They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
I won! Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking, and of course Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S. What is
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19 they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
Yo, cuz you, what up? You rolling with us? What do you want me to do? Nah, you better chill out, man. Stay in here. Tell them it's not safe outside, my nigga.
Baby boy back in the city. I'm back in the...
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of two suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venagold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venagold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venagold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venagold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venagold as an opportunity to leave that troubled home. Venagold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, 1 kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At 1 kilometer, it's still going to be very bad and will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1-kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and space is really big. And then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today. And then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. Asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
Always on my mind. Thinking about you all the time. Gotta let you go sometime. I do what I want to. I do what I want to. Had a couple dreams till they came true. I do what I want to. I couple drinks, yeah, come through. I do what I want to. I can't breathe, you're my lifeline. Have some bad things at the right time. Know you like when I take my time. Know I like when you take up mine. We gon' be on top, yeah, for life. We gon' need a lot, this a nightlife. I catch feels when I take up wine. Drive my ex, you know it's wake up time. Always on my mind. Think about you all the time. Gotta let you go sometime. I do what I want to. I do what I want to. Had a couple dreams till they came true. I do what I want to. I do what I want to. I get high when I want to. Have a couple drinks and come through. I do what I want to.
And gotta tell you twice, curtains close, yeah. My seats is on the floor, can't do rolls up. Can't do the nosebleeds, bitch, I'm close up. Have you ever seen a butt?
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating, where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission, that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities and the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't. And the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and write up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now clearly this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwits, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price, before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
the GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally miles, a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, Google in the morning, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we